Ladies and gentlemen, Christopher Aaron here. It is February 20th, 2019. Thank you for tuning in. I want to update you on what I see happening in two of the other precious metals. I'm talking about platinum and palladium. Now, we spoke about this about 6 weeks ago. The patterns are getting closer to resolving. I want to show you what I'm seeing here because I think there's a major opportunity setting up in both platinum and palladium. You're not going to hear on this channel, however, simply to buy. There is a time to sell, there is a time to buy, and I want to look at both of those opportunities. I wanted to let you know first quickly, some individuals sent messages saying that they had a hard time getting the coupon code for Bullion exchanges to work. By the way, there is a coupon code. It's for $10 off an order of $300 or more. So you can try them out. I know them personally. I know the owner of Bullion exchanges. Good guys, good service. The coupon is below. I made the instructions a little bit more clear to understand. You do have to be logged into your account to type in the coupon code, and you have to be a first-time customer. So they're just doing that to give a discount if you want to try them out. If not, if you have other dealerships you like, absolutely go ahead with them. Let's turn to platinum and palladium because I think this is going to be a big trade. This might actually end up being the opportunity of 2019 when we look back at it. A couple years ago, I was talking about 2016. I was convinced the opportunity was in the gold miners as a ratio. The ratio was so low, but this year I'm seeing this ratio really skewed in platinum and palladium. And so this just brings me to a point that I wanted to bring up quickly because I'm seeing a lot of this right now in the various markets, and there's this fear of missing out. This is a psychological phenomenon that they talk about where because we see certain things happening, certain prices going higher, we fear missing out. We think we missed the one opportunity. Let's say if it's with gold or gold miners or silver, we missed the one opportunity and we're never going to have that opportunity again. And I want to just encourage you right now to keep calm and say no to FOMO, as it's called. And the reason for this, I've been touching on this over the last few weeks. I think that it's much more important to learn the process of identifying markets than it is to focus only on one market and to say, this is the market. I have to be right on this one right now or else I have nothing else. Right? So if you can learn the process of identifying which markets are topping, which markets are bottoming, what the risk to reward ratio is, then there's really no fear of missing out. Because the truth is, there are infinite opportunities. We're talking about infinite opportunities in an infinite universe as far as we know, and also within the markets. So when one opportunity comes, another opportunity goes, and then another opportunity comes. And it keeps repeating like that. So I just want to encourage you to not succumb to any fear of missing out. Learn the process. Get it down for yourself, a system that works for you. I'm here to show you a system that works for me and some of my colleagues as well. And we're looking at platinum. We are looking from the year 2000 through the present. Let's call it almost a 2-decade view. Now, we brought this up 6 weeks ago. Here's the key, by the way. I know we have a, slight tendency toward psychedelic colors here looking in these charts, but I assure you, every color has a meaning and a rhyme and a reason to it. So get to know this system. Now, we looked at this 6 weeks ago. Here's platinum from the 2-decade view. And the important point, we're talking about this primary long-term down channel here that formed from the 2011 high. Just as a side note, of course, this peak corresponded with the peak in gold and silver, more or less, in 2011. Notice how platinum made a lower high than its 2008 peak. So very similar to oil, for example, what happened there. But we're going to focus in because here's the opportunity. We're focusing in on this down channel. Let's zoom it in and just look at the health of this down channel. Look how clear this is. We're talking a 6-year down channel. Look at the number of hits on the upper and the lower lines here. And let's zoom this in again because look where we are right now. Once again, bumping against, 1, 2, 3, 4, the false breakout on the 5th attempt, back into the channel on the 6th attempt, and we're having a 7th attempt at the upper boundary here in platinum prices. Okay, just above $800 per ounce right now. So here's the opportunity. Let's zoom it in again. Now here's that triangle. We were talking about this last time. The triangle here that is forming, triangle being a neutral pattern. Remember that this pattern is not just forming anywhere randomly. This is forming at a 15-year support zone. This support zone exists roughly between $750 and $810 an ounce. So it's been bouncing in that support zone. Within that, it's been forming this triangle. Look how it gave a little fake out just a few days ago. Right below that triangle, they say markets like to take the least number of participants with them when they make the real moves. So can you see how this triangle here is, it is condensing. It is getting tighter and tighter and tighter. And there is about 2 months left, 2 months of this pattern to go before we get a strong break in one direction or the other. Now, initial targets, we'll be looking at something definitely coming back into this 1,000 region and most likely into the 1,200 region if this pattern breaks to the upside. This is what I'm looking at as a potential, and then we'll go from there. I sort of like to take things one step at a time at this point and not have to give, 5-year projections, but hey, let's look at a 6 to 12 month projection. That just feels more comfortable to me. Now, the real opportunity here is not just in platinum. Platinum, I think, is setting up for a nice trade. Like I said, a 6 to 12 month trade. What happens after that point is a question. But when we look at this from a slightly different perspective, now let's pull up the Palladium chart, okay? We are looking at the 22-year view of Palladium. Multi-decade consolidation zone. It has just broken out. Now, this market is in the parabolic phase, however, of an advance that began in 2016 at the bottom here. We're talking about prices that have almost tripled in 3 years. They've broken out of a multi-decade consolidation, and we're definitely getting into that almost vertical, the almost, straight vertical type of move here. Similar to how a lot of those charts look that we were looking at a couple months ago, the Bitcoin chart, similar to some of the other bubbles that have formed. Am I calling Palladium a bubble right now? Probably not. I actually think there is still room to go on the upside. Now, target projection, it's easier to measure targets and come up with projections when you're talking breakdowns or you're talking a triangle pattern such as we saw in platinum. But target projections, when you are in a market that literally is at an all-time high and has broken out of a multi-decade consolidation here, this gets a little more challenging. There's a few tools that we can use, and please keep in mind, so we're talking about forming a probability here. Where does the probability exist at this moment in time for where the Palladium market is going to top? So we can look at, for example, the amplitude from the most recent major low here at the $150 level up through this multi-decade resistance. This is an amplitude of $950. We can add that amplitude onto the breakout point, and you get an upper target of $2,050. So that would still be a move of about $600 left to go on the upper side. Now, there's nothing guaranteeing that it has to hit that, and furthermore, there's nothing guaranteeing that move is going to come in a straight line. This market could very well, I want to make this caveat, very well come all the way back down to 1,100, even 1,000 here, slightly come back below the breakout point to retest that breakout point before it continues higher. So I would say if you are not in the Palladium market at this point, there is a lot of risk to buying right now. I would wait for a sizable pullback before buying in and not have that fear of missing out, because you know what? The risk to reward at this point is just not worth it. Turn your attention to other markets that are not in a parabolic type of move right now. Another way we can estimate, so I have the lower end of the target zone here at $1,685 per ounce. How are we getting that? That is now we're not talking Fibonacci retracements. You can see those down here. That's if we were talking a move from the peak down to the bottom. We're talking about a Fibonacci extension. It's rare that I use these because we're mostly focused on markets that are range bound or bottoming at this point. But when we're talking about a clear breakout, we have to use a Fibonacci extension. We're talking a 61.8% Fibonacci extension of this entire move. It gives a lower target, and when you have several targets, what you do is you form a range. So we have a range of targets here between 1685 and 2050. Now, this is not meant to provide an exact target at this moment in time. This is meant to give guidance for well into the future, the next several years. And as we get closer to these targets, we dial in this analysis. Okay, this is how it works. I don't try to give a specific number that could be still 2 or 3 years off and say, stick with that no matter what else happens. Markets are always in a state of flux. Now, the even more exciting thing, though, this is what I was getting at in the very beginning. The most exciting thing about what is happening here with platinum and palladium, platinum versus palladium, we are looking at the ratio. We just looked at the two commodities themselves, and now we are looking at a ratio going back to 1980. Okay, how many ounces of platinum to 1 ounce of palladium? We can see this ratio has varied really between, if you look at some of these top levels here, between 5 and 6, all the way down to half an ounce, slightly below half an ounce. And would you know it, where are we right now? Back down at that absolute low from 2001. So keep in mind, when we're talking about ratios between real asset classes, this cannot go to zero. And this is tied for the lowest valuation of platinum versus palladium that we have ever seen. Cannot go to zero. These are the kinds of setups that I really, really like. Because we're not talking about something that's here in the middle or here, after a pullback, but still in the middle. We're talking about something at a generational extreme as far as the ratio goes. Now, if you're following this kind of analysis, you'll notice, look at the pattern that's forming here. A terminal wedge within the downward channel lasting for the last 6 years. You could not ask for a better setup. What is the setup? It's a spread trade. It's a ratio spread trade. This is my favorite risk to reward setup in the markets when you're talking a real asset class ratio spread trade. So what do I mean by that? We're looking at that same ratio. We were just looking at this on the top. Here's the ratio going back 40 years. And in the middle, we're just looking at the price of platinum over the same amount of time, and we're looking at the price of palladium over the same amount of time. And we were just talking about this low right here, and we had said that a similar low was forming here in the ratio at this 0.5 level. Okay, now follow down in the shading here and look at the last time that this ratio hit this level. Let me move the shadings out of the way for a moment. Look at the last time. Okay, it was when platinum was in the $600 range and palladium had seen one of these parabolic moves, quite similar in trajectory with a different nominal value than we are seeing right now, right? Quite interesting here that this has come back to the same. We're seeing that same parabolic move, and we're seeing platinum basically all but forgotten at this point. So what is the ratio? What is the spread trade here? This is what I will be doing personally. I can't tell you what to do. I can only tell you exactly what I'm going to be doing, and that is going to be a trade of going long, in other words, buying platinum and shorting palladium. Basically, betting that palladium is going to go down, and at the same point, platinum is going to go up, and that this ratio is going to come back somewhere into the middle range. And even if this ratio only comes back from 0.5 to 1, that will represent a doubling of my investment. If it goes from 0.5 up to 2, you're going to have a 1, 2, 3-fold move here between these asset classes. So how did that play out last time? Once again, now it's interesting to look. The last time this happened, right? So imagine you were buying, as I said, buying platinum and shorting palladium at this moment. You actually lost money on the platinum side of things in the very beginning for the first 6 months or so. It fell by about $200 an ounce here. But that's okay. Why? Because look at what happened to the palladium part of it. Palladium outright collapsed, gave back all of its gains from the previous few years. So you lost a little bit of money on the platinum long, and you gained a lot on the palladium short. And then if you held on to this trade for into the second year, you made back your money, and then platinum started to really outperform while palladium did not recover. Now, just as a side note, I probably would have closed this trade right here somewhere. Definitely would not have held this for, the entire 8 or 10 years. I would have closed this on something of a parabolic move in the ratio itself and said, hey, here we are. We got our money back on the platinum side, so we're about even there, and we've had something like an 80% gain on the short in palladium. That's how I would have done that. What am I saying is that the exact same scenario is setting up right now. And there should be about 2 to 3 months left to prepare for this one. And of course, we'll take this portion of things as it comes. But at least as far as the platinum side, that's what looks like is going to be setting up here over the next two or so months. So definitely time to get ready for that one. So as I said, again, I think it's important to remember. By the way, make sure you hit the subscribe button on the YouTube channel. That way you'll see the notices of the more recent videos that come up. But it's important to, as always, know yourself. And in knowing yourself, I would just challenge you. I would just ask you to look deep within yourself and ask yourself that question. Would it feel better to not have all your eggs in one basket, to not be only focusing on one market so that you feel like, hey, if that one market starts to get away from you, then you're missing out? Or would it feel better to be diversifying your knowledge base, your exposure, so that if one market starts to take off and you weren't participating, you've got other markets there. You've got other opportunities. So that's what I'm doing personally. I hope you feel the same way. But even if not, that's okay. And I just hope you get something out of these videos so you can prepare for yourself however you want to tackle these markets. Just want to let you know quickly, I work with individuals by voice and by email for consultations when your situation requires a researched, independent perspective on anything that we've talked about here. There is a premium service where we cover the precious metals, gold and silver, which we have not covered today. There's a lot of action happening in the gold and silver sectors, and we will be covering that in extensive depth this weekend. There is a new service coming out, which is called Global Market Intelligence, coming soon, where we'll be talking about these trade opportunities in platinum, palladium, as I said, and in the other currencies and stocks and bonds. This weekend, coming in Precious Metals Intelligence, is our special 1-hour monthly video. And there are some real serious topics that I'm going to bring up. We're going to be talking about GDX and GDXJ. Now, I can't believe it's gotten to this point, but I'll tell you, I have a theory which is strongly gaining evidence on my part that I'm going to be presenting, that the GDX and the GDXJ funds are themselves starting to take on bubble-like characteristics. Okay, so if you're investing in these as your primary way to get exposure to the miners, I would just say be careful. Now, this is not something that is going to blow up this week or next week, but I'm looking at long-term divergences here happening between these funds and the actual underlying components. So that's coming this weekend. We'll also talk about the U.S. stock market and gold. What now? Where are we? Thank you for tuning in, and I will see you this time next week. I hope you have a great weekend.